Time now for business and news of a trade truce. Joining us is Stephen Carroll, our business editor at the World Economic Forum in Davos. The French and the United States agreeing to put on hold that digital tax the French want. This to give more time for discussions. Stephen, what's in the agreement of today?
So it's really an agreement to just delay to allow time for talks, but there's some really crucial elements of this. First of all, the digital tax does remain in place in France. What the French government is doing is simply delaying the payments that will be made by those tech firms. The first of them would have been due in April of this year. That money now will not be taken from those companies or won't be asked for from those companies, but will still remain pending and will remain pending until the end of 2020. That was the timeline given by Bruno Le Maire, as they're hoping to have an international deal done by the end of the year. In return, the US has agreed to suspend any sanctions against France, those threatened tariffs on French imports into the United States, while those discussions happen. And interestingly, and I suppose perhaps most significantly from a broader point of view, they have agreed to proceed with negotiations at the OECD, the Organization for Economic Cooperation and Development. They've come up with a global plan to tackle taxing these digital giants, and it's through the OECD that the US and France are going to engage. The details of that engagement, though, the base of work, as it was described by French Finance Minister Bruno Le Maire, will be decided at a meeting tomorrow between Bruno Le Maire, the French Finance Minister, Stephen Mnuchin, the US Treasury Secretary, and the head of the OECD, Angel Gurria. Now, they're going to be talking about, I suppose, the framework for their discussions, but Bruno Le Maire felt that this was an agreement, a framework they had agreed that had pushed this deadline back to the end of 2020 on a basis that they will agree a tax not only on digital giants, but also a minimum global rate of tax for companies. That's something that's integral to this deal, according to Bruno Le Maire. The OECD would see it the same way. The United States had wanted to make the tech part of this optional, but they now seem to be interested in coming to the table at least and discussing the OECD plan. That plan, if agreed, would sign up 135 countries to this new international tax agreement, overhauling rules that have been in place for nearly 100 years and would totally really change the way that companies pay tax around the world.
All right, so Davos, a chance to negotiate, also a chance to exchange perspectives, Stephen. One of the issues is nations competing not just for investment, but also for talent.
Francois, I'd like to find you some interesting stories while I'm here as well, away from the main stage in Davos. This is a really interesting survey that's come out from the French business school INSEAD, launched here at Davos, but feeding into the discussions here that are happening about, a search for talent. We hear about a shortage of labour in many sectors and in many developed economies, but also how countries are competing with each other to try and get the most talented people to move there, and how they're incentivising that, but also to how to train people to become the top talent in the world. Their Global Talent Competitive Index was launched in Davos here today. Switzerland came out on top. It is a list that is dominated in the top 20 by European countries and developed countries in general. I've been speaking about it to Bruno Lanvin from INSEAD Business School. What is it that these countries have that enables them to attract the best talent?
It's not just about attraction, it's also about growing talent, about retaining talent, all that we call talent competitiveness. Basically, what they have is advantages of dynamic economies. Their labor markets need talent, they need innovation, they need competitiveness, and they mobilize their resources to do that. So rich countries have an advantage over poorer countries. But when we look at themes such as AI, we see significant possibilities for leapfrogging. And indeed, through what we call our longitudinal analysis, by which we compare the performance of countries, let's say 4 or 5 years ago to what it is now, we see countries like Indonesia making significant progress. So there is hope everywhere.
When we talk about artificial intelligence, people often fear that it's going to kill jobs. But your study shows that, in fact, it can help to create more employment as well.
Definitely, it is both. When looking at jobs and AI, people tend to focus very much on the two ends of the spectrum. On one hand, they look at the tasks which are obviously going to be carried out by robots in the future. These are repetitive tasks, dangerous tasks, uninteresting tasks, so to speak. At the other end of the spectrum, they tend to say, yes, but everything that will create need creativity, need innovation, need empathy, etc., will remain human for a long time to go. Both are very true. But what is important now is what some authors have called the missing middle, what we call the fusion skills. That is, how can we develop the skills today that will enable AI on one hand and humans on the other hand to work better together and not against one another.
Meanwhile, France comes in at 21st in your rankings. Is that low given the size of the economy and its wealth?
The performance of France is what its GDP per capita predicts. That is, it is on par with what can be expected. But France can do much better. It has a number of assets. The quality of its education system is praised everywhere. French talent who immigrate do generally very well.
But they emigrate to do so in a lot of cases.
They immigrate to do so. So exactly, the challenge is to retain talent for France. And efforts are starting to pay off. INSEAD, for instance, is very much involved in Station F. And we see indeed the startup scene becoming more buoyant, more vivid, more lively in France. The success of meetings like Truce France, which took place 2 days ago in Versailles, is also a critical element to increase the visibility of France and to attract, through higher investment, higher levels of talent.
And before we let you go, Stephen, a programming note, please. A special edition of the France 24 debate Thursday that you'll be hosting from Davos.
That's right. You're very kindly lending me your seat for one night only. We are doing a special debate on how to tax the digital economy, very topical this week at Davos. The French Finance Minister, Bruno Le Maire, will be there. The head of the OECD, Angel Gurria, will be there. We've also got the head of Transparency International, the anti-corruption organisation, and Columbia Law professor Katharina Pister will also be joining us too. That'll be tomorrow at the usual time for the France 24 debate from Davos.
Stephen Carroll reporting live from the World Economic Forum. Many thanks for that update.